All right, we're going to look at chapter 12, number 58. I'm going to let you read the first portion of the problem, which talks about the taxable income, and then also the ordinary income and the dividend income tax rates. In A, it says, how much total income tax will Custom Craft Services and Geron pay, combining both corporate and shareholder level taxes on the $200,000 taxable income for the year if CCS doesn't pay any salary to Geron and instead distributes all of its after-tax income to Geron as a dividend? Assume Geron is not subject to the net income tax or the additional Medicare tax. So we don't have to worry about those there. So we can see that there's the taxable income is $200,000. So let's pop over to my spreadsheet that we have for us here. So we have $200,000, and without salary and salary, it's the same. All right. We will do B in just a minute, so I'm going to already put that in there, but let's take a look at the salary. We don't have any, because it said there before. So my taxable income then is going to be $200,000. So $200,000 taxable income before it. We have no salary, and we have a taxable income of that. So entity tax. So what we're going to do is take, as I said before, it was 35% here. So that's what we have. So we have 35%. So I'm going to multiply this number here times the 35%, giving me $70,000. That giving me my after tax here of, excuse me, this minus this, giving me $130,000 there. So with that, we then have the $130,000. We are going to take that number and multiply it by the dividend tax that we have as a part of that, which is the dividend tax rate is right here at 15%. So that's what we will use. So I'm going to take this number here, times 15%, giving me $19,500. So the combined tax, so I'm going to need to combine these two here to get the combined tax. So equals this here plus this. Gives me $89,500. All right, so that's A. Let's take a look at B. I'm going to read through that real quick. So in B, how much total income tax will Custom Craft Services and Geron pay, similar to that, on the $200,000 of income? They pay him a salary of $150,000 and distributes its remaining after-tax earnings to Geron as a dividend. And again, not subject to investment income tax and additional Medicare. All right, so we know it's $200,000. We have $150,000 that he is being paid. So that means his taxable income is then going to be this minus this for the entity. We will take that same number as we did before times 35%. So this here times 35, giving me $17,500. All right, so with that, I'm going to take these to get my after-tax entity earnings. I will take my $50,000 that I have right here minus my $17,500, giving me $32,500. All right, now I have to do Geron's tax on dividends and salary. So there's a combination that I need to do here as a part of that. So he has $150,000. I'm going to have to do a more extensive formula here. Multiply that times 35%, and then I'm going to add that to his the amount that I have right here, parentheses first, the after-tax earnings, because that's what's going to be distributed to him in a dividend. So 15% the dividend, the entity tax is 35%, that giving me a total of $57,375. So what I'm going to do again with this here, I am going to copy that over here, and so I'm adding the $17,500 and the $57,375 to get that number. All right, as we look at that, it's obviously, you can see that there's a difference between the two in A and B. Obviously, it's a little better tax-wise to take the B than it is the A, because the taxing on that for the entity and the Geron is a part of that. Let me know if you have any questions. Otherwise, have a great day.